Technical analysis for beginners. It's very important to know the technical and the fundamental of the market before you explore any trade. So today I'll be talking on the technical analysis for the next 30 minutes. Keep watching. Good morning, Namaskar. I'm Divakar. Welcome to Bulls and Bear Bulletin. Let's quickly go through the topics which I'm going to cover today. I'll begin with Nifty and Bank Nifty technicals, and then I'll talk on global market scenario, how it's going to be important for the Indian market, and then the indicator which I use regularly, moving average, an option chain, which is again a data which you should study to check the support and the resistance level of index or stock. And yes, I'll be talking the primary topic of today, the technical analysis for beginners. If time permits, I'll continue one of my favorite topics on the spreads, bull spread and iron condor, which I'm discussing for the last several sessions. So meanwhile, I request you to subscribe to my channel if you are not yet subscribed, and like it. If you see here on the last week of September, the Nifty made a high of about 26,300 all-time high and started declining from there. And initially, it took support around 23,400 level. And you can see this green candle where it bounced back. Initially, it gave an impression that the correction is over and it's resuming its bull run. However, we were wrong when it took a resistance around 24,800 level and started declining once again. This time, the market started making newer lows, and the new low for the season was around 21,900 level, which was on the 4th of March. By this time, Nifty had corrected by at least about 4,300 points, or you can say about 14 to 15% correction. And that is something very big for an index. In stocks, even in good stocks, you get to see 25 to 50% correction, but not on index. Well, by this time, if you have observed here, the RSI indicator and the MACD indicator, were showing extremely oversold scenario. RSI was at its lowest on the chart. We have never seen the RSI making this kind of a low, so suggesting the market will bounce back any moment from now. And that's what exactly happened, and it started claiming upwards. However, it took resistance around 23,800 level and started declining once again. Well, this time, along with this, the global market scenario on the trade tariff pushed the market negatively, and that's how the market went on making once again, the new low of 21,800. So this was on 7th of April, and here you can see the market aggressively started bouncing back, and this time it was pretty comfortable in crossing the resistance of 23,800 and went on making higher and highs, and this time breaking the important 25,000 mark also. Well, after that, we are seeing the market has really not scaled up, and in fact, it is many times given threat that it will once again break the 24,500 level. Well, the Friday was different. The breakout on the upside again happened. The 25,100, which was the resistance, where the market attempted at least 2 or 3 times and failed, was comfortably broken. But however, today you can see again the market is on the corrective mode. Well, this could be just the profit booking and a small opportunity, like you can say, opportunity to buy on dip. But well, you need to keep a good stop loss even here if you're entering on the lower place. So 24,800 definitely becomes a very strong support compared to the earlier chart. So This could be a good buying opportunity. So we just need to wait for a couple of minutes or some time. We let the market settle down around this level, and buying would be one of the best place. So that's how the technical on the Nifty can be seen. And we will go to the next topic, the global market scenario. Well, if you can see here, firstly on the US market, the S&P 500 is minus 0.22%, and the tech index NASDAQ is also minus 0.43%. However, if you can refer the futures, there is a little bit of change on basically because of the Sunday news. And let's go to the next market, UK, where FTSE 100 index is indicating around minus 0.2%. And if you come to the Japan on the Asian market, the Japan 225 index is also minus 0.32%. And if you come to Chinese market, the SSC composite index, I'm just picking up, four international markets to refer. One can choose different markets also. Two from Asia, one from UK, and one, of course, US. US is very important and high influential on the Indian market, on the world market. So we need to refer that without fail. Apart from that, you can refer few Asian markets or UK market to get further how things are working. Well, there is a small data input problem from the Chinese market. Let's go to the next topic and come back later and see this. So, next topic is on the indicator where you know you get to know the moving averages. Well, let's go to the topic moving average. A moving average helps in identifying how your stock is positioned. So before that, let's know what is a moving average in brief. A moving average is nothing but a particular stock, say for a period of 10 days. If it's taken the closing price on each day and averaged, that becomes the moving average of that particular stock. So you can get to know how your stock is performing for that period, and based on that, you can analyze and take a trade. There are different popular moving averages for studying, and these are the 10-day, 20-day, 50-day, 100-day, and the 200-day moving averages. So all are represented by different colored lines in this chart. Amongst this, the 200-day moving average, the orange line here, what you can see is the most important one. So any stock or index is trading below this line, it's considered as weak or bearish, and any stock trading above this line is considered as strong or bullish. So it's very simple. If you see a stock or index crossing this line downwards, and that is the time you should sell and wait until again the stock returns and starts trading above that. Until that, you make a use of it and keep your rally running. At the same time, if you see a stock or index crossing this line going above, and that is the time you execute your buy, and then you keep on trading it and rally uh, as long as it's trading above that. So it's as simple as that. But however, there are factors which come into place, like what kind of a trade you're taking, whether it's intraday, a short term, or a long term. So that is the time these other moving averages come into picture. And using all this, you can definitely plan yourself and take a good trade. Well, I will discuss in detail in the coming up sessions. So keep watching my channel. If you're not yet subscribed to my channel, I request you right now to subscribe to my channel. Well, let's go to the next topic, which is the data on the option, which helps us to know the support and the resistance level. And if you open here, the index is showing the spot at 24,889, and expiry is on 26th June. So if you come down and see 24,900 as the nearest level to spot, on the left side, you can see 71 lakh is the call open interest versus 74 lakh put open interest. Suggest there is an equal fight between the bulls and bears. So the level, this is the level we need to watch out for. And then if you go further down, 24,800 is having 8 lakh, 80 lakh put open interest versus 42 lakh call open interest. Suggests there is a strong support here. And then if you come upwards, at 25,000, you can see 1 crore 15 lakh call open interest and 86 lakh put open interest, suggesting there is a resistance built up here. So as of intraday per se, you can look at 24,800 and 25,000 as your range, the support and the resistance. And based on that, closer to 24, 800 or 850 is the time you should execute your bullish trade, and you should be executing at around 25,000, or if the market gives an opportunity, you can execute a sell trade. Well, friends, that's how things are done. And however, the option chain, where you can see the support and the resistance level, always work on a normal market conditions. If the market is extremely aggressive and trending on one side, none of the support or the resistance will be able to hold on to that, and it will break. So please remember that and plan your trade. Well, the broader market picture is the one where you can get to see again some good information. Well, if you see here, there are 2,551 stocks being traded, where only 725 stocks are advancing and 1,768 stocks are declining, suggests the market sentiment right now is negative. So this is also one very useful information. So you can see overall the market trend is down, and based on the indicators, and finally now looking at the data on the number of stocks also is suggesting the sentiment is negative, and based on that you can take your trade. More or less, it is a bearish kind of a trade which you should be looking at. So ideally, a bear spread or buying a put is what one should look out for. And however, you keep an eye on this data, where many times in the later day on the second session or by 11 o'clock, this can change and turn around the table completely. Well, all these things we have seen. So this helps up to a large extent, and you plan your trade accordingly. Well, friends, let's go just quickly once see how things are looking on the Nifty. Suppose if were to take a trade, uh, what would be that? So as I've already shown you the technical part of it, closer to 24, 800, 850 is where we should be looking for uh, buying. And suppose 24, 800 is broken, and then we should be looking for a bearish trade. And that's how things are done now. Right now, we need to wait. And as I said, on the upward move, you can look for a, a bull spread kind of a strategy. And on the downwards, you can look for a bearish kind of a strategy. Well, let me put it on the notes. Broader market sentiment is weak, and option chain suggests 24, support at 24,800 and resistance at 25,000. My view is one should look at look for buying around 24,850 or so. That is buy a call or bull spread. That is buy a 24,800 call and sell a 2500 call. So this is more safer strategy, buying a 24,800 call and 25 selling a 2500 call. So this is how things are looked at. And stop loss 500 per lot and trade with minimum 2 lots. So idea is you need to exit the first lot at 500 profit and exit second lot keeping a trail stop loss to begin with 200 and so on. So, well, because of the volatility, what you may experience is if you have a target of 1,000 rupees per lot, and you would expect if the market goes towards 25,000 with this strategy, I'm going to make 1,000 rupees profit. Well, on half of the way, if the market turns around when you're seeing 500 rupees profit and goes down, then the opportunity of even that 500 rupee profit is lost. So avoid that. If you have multiple lots, 2 lots or above, you can book 50% of your lots at that profit as soon as you see some decent profit, 300, 400, 500, whatever, and then carry on with the remaining lots as the primary trade with the trailing stop loss. So in this way, most of the days you are secured, and doesn't matter if the market rallies, you will get the best of the profits. If the market reverses, you got nothing to lose. You are on at least with minimum profit. If the market reverses from the minute you take a trade, then that's bad luck. You need to look for a stop loss at around 500 rupees, which I mentioned in the beginning. Now let's also go and just see how things work from here. See, it's spot is 24 around the same place. So let's hope it's getting settled there. So create a basket, easy to execute on a basket. So Nifty 23rd June is the date which I'll give 24,800 call. I will add up here, and 2500 call I will put as a sell and add up. Now you can see there are two trades in a basket. One is buying the 24,800 call at 184 and 2500 call selling at 54. So what will happen is the call which you have bought here will give the actual profits if the market goes up, and if the market is stagnant and wasting time, and that is the time option premium theta decay happens and you lose it. So that is the time you make profit from this sold call, which will cover up losses for this. So it's more safer trade, and easy to execute, and margin is less. So trade with at least minimum 2 lots, or above 5-10 lots is fine. And but be careful on the stop loss, to keep it strict at 500 or less. And if the market is favoring your side, then exit with 50% of the lots as soon as you see some decent profit, and carry on with the remaining lots with the trailing stop loss. Well, I'll also analyze and show you how things work from here. If you can see here, the if the market goes towards 24,900, you will be making a profit of about 3,000 rupees here. So ideally, we will exit the first part of it with the minimum profit. We don't know the bigger target, so exit. And then if the market is trying to cross the 25,000 or around 24,900, where we are seeing, if this profit is there, then why not? You can exit and take the maximum out of it. Well, that's how we analyze and take a trade, friends. On this context, I request you to subscribe to my channel if you're not it, and give me your feedback also on my YouTube channel comment section, or on my Twitter account at BNBBULLETIN. If you have any questions, feel free to ask. I'll be happy to answer. And join me on the regular sessions on videos which I come out with important information and useful strategies. Until I see you next time, take care. Bye bye.